I observed with some colleagues approximately 10 years ago that public markets were increasingly less well-equipped to finance technology and growth, while on the other hand, private markets was filling the gap.
That's Robert Pierce, an expert partner based out of our London office and the former managing director of Tech Economy, a boutique consulting firm that Bain acquired roughly a year ago. Just about all of our clients in Europe have worked with Robert, and you're about to find out why.
We are rapidly building the Tech Insights team in Europe, in the United States, working on integrated commercial diligence and technology diligence.
Today on the show, he'll explain how looking for interdependencies between commercial due diligence and tech due diligence really add critical value to clients in evaluating their investment theses, the risks, and the upsides. I'm Hugh MacArthur, head of Bain's Global Private Equity Practice, and this is Dry Powder. You know, Robert, thinking back over 20 some odd years, tech investing for the private equity world was really kind of a niche and a highly specialized area at that. But reflecting on where it's gone, tech has really infused just about everything in the private equity / buyout world. Technology is the largest subsector, with software making up about 90% of the value of that. It accounts for over 30% of all deals done. And I also noticed when I look to other sectors like financial services, we're seeing things in fintech and payments and tech-enabled business services and healthcare IT. It really seems to be just an explosion of technology in the buyout space in particular. As you look back, are you surprised at how this kind of niche consulting service has just scaled along with the industry?
The industry has grown indeed very fast. Initially, growth capital and venture capital were focused on technology and private equity less so. Over time, private equity has learned to discover the opportunity in the technology space. And there certainly has been that shift. The market has evolved rapidly because over time, investors grew to encompass increasingly complex technology and larger investments. The market's also involved because, software is eating the world. Think of maintenance of residential housing. Suddenly, there are platforms which integrate all the demands of tenants in buildings and which will make sure that they are served. And all of these are platforms. One project we worked on was a business for fisheries, which had completely automated how their ships went from various locations. Think of, Uber in terms of, which drivers are going to serve which customers. They're really, in terms of examples, pretty much the entire old economy.
That's astonishing. Everything from real estate maintenance to Uber for fisheries. So I guess software really is eating the world here as we go forward, Robert. Let's look ahead a little bit. What do you think is going to be important to clients over the next 3 to 5 years?
It's quite apparent that technology-enabled businesses are increasingly mainstream, and that pure technology businesses are also increasingly mainstream. And so as they will be maturing, then they will be operating in increasingly competitive markets. So from that, I would infer that understanding in greater detail how that innovation will take place, how it will serve customers, and how it is going to enable differentiation versus competition will become more and more important. If you stop and think about it, technology is but a product. It is only really relevant from the perspective of a market it is designed to serve. And so looking at technology and conducting technology diligences in the context of commercial diligence, there are two sides of the same coin. You look at the product, you look at the market it is designed to serve.
Robert, it sounds like you're really describing almost a convergence between commercial and tech due diligence. How do you integrate those two things given that type of trend?
Both work streams require very different competencies. So I'm of the belief that actually they both will remain very important, but indeed they'll increasingly work together. The way I think about it, and I don't think there's a secret sauce to it in terms of a specific model. Every project, every deal we analyze is different from the last one and from the next one. And that's what we love about what we do. So while I don't see a specific model, I think the way we address it is that we start with the investment thesis and we understand where there are interdependencies. And don't think overlap, really think interdependencies between the technology and the market. To which extent is the business driven in a certain direction to serve one part of the market or another part of the market? And from that perspective, is the technology going to enable that to happen? So it's really thinking of those interdependencies and both teams working very closely at the investment thesis, at when we're scoping. And then obviously we work very close together and we constantly try to answer those questions for each other and identify new interdependencies as our work progresses and our knowledge of the specifics of the business improve.
Now, Robert, let's take Europe as an example and tell me a little bit about some emerging trends that you're seeing in that geography.
In the first place, I would certainly point to a contrast versus the United States, and that is vendor diligence, which we do not see in the United States, or we see very, very little of. From my perspective, I see how much value is left on the table by investors because potential buyers are still unnecessarily uncomfortable about the businesses they're investing in from a technology perspective. So really being there and being able to help the technology teams of portfolio companies prepare for the diligence they're going to be subjected to throughout the process, to me sounds like a phenomenal differentiation in Europe versus the United States. And the underlying concept is fundamentally very simple. Risk means higher discount rate. You reduce the risk, you reduce the discount rate on the investment, you're actually increasing the value an investor can feel comfortable paying for an asset.
Right. And of course, vendor diligence is more required in Europe because the banks are requiring it for transactions. We'll see where the US market goes, but not required in most transactions yet. So what actually should a vendor diligence report look like? How do we bridge that gap and provide that education that you're describing?
So there are two aspects to that. I think the first one, which is really interesting, the vendor diligence report by no means should be a sell document. It has to remain extremely objective, extremely true north. Otherwise, it becomes a marketing document. If it becomes a marketing document, it loses its value in terms of reducing risk for the potential buyers. So that would be the premise of it. The second element is it has to be very complete. Buyers are obviously very knowledgeable and will recognize that if there are some apparent unsaid aspects in the diligence report, that those are potentially areas of risk. So being candid, very transparent is the standard which we apply. In terms of educating our clients or helping our clients understand the merit of vendor diligence, it's really inviting them to think as investors themselves, what are the aspects they would have liked to know about businesses they've invested in the past, and think, well, if they had understood that, if it had been very clear for them, they would have felt more comfortable with the investment and perhaps paid a better price.
Well, Robert, I'm very appreciative that you've been on the show for a couple of reasons. Number one, I'm appreciative that you were able to take the time to visit with us today and explain what tech economy is all about. Number two, I'm very grateful personally that you've taught this old Luddite a couple of things about technology and how increasingly critical it is in so many investment theses to actually get this right. So thank you for coming by.
Thank you very much, Hugh. My pleasure.
I'm Hugh MacArthur. Thank you for listening.